Hi, good afternoon. Thanks for joining us today. Welcome to America Outdoors Spring Webinar Series. My name is Karen Short. I am the member specialist for America Outdoors. Today's event, we have insurance coverage for employee risk. Ruthie Rivers is here with Granite Insurance presenting that for us. A couple quick reminders from America Outdoors. We have lots of things coming up that I want to make sure are on your radar. First of all, we have 3 more webinars coming up in March. We have them all listed in the events page of our website, and we'll direct you there later. We also have Managers Academy that will be in April, which is a great opportunity for education for managers as you start the season. And then we have 2 fundraising trips coming up this fall. These are a ton of fun. And they're also really, really great experiences. So we'll drop those events in the chat so you can kind of check out those links, or you can go to our webpage and everything is listed on there with the details. So I'd love for you guys to check those out as we go. Before we start our webinar, I also want to introduce, we have Brian Merrill with us today. Thank you for being here, Brian. Brian is with Western River Expeditions. He is generously hosting one of our fall trips. And Brian, I just really want you to help us talk about that trip a little bit. It's a really important thing for America Outdoors, and it's a really amazing trip. So could you tell us about, we're going to Desolation Canyon, right?
That's right.
Could you tell us about Desolation and why it's such a great place?
You know, I think for our river guides, and this has been for as long as I've been involved, who have actually guided it as part of our Utah operation, when they get asked what is their personal favorite trip, I would say that by far and away the majority of them, even those who have moved on to guiding Grand Canyon and the Mac Daddy trip of all time, they still reflect back and say the Desolation Canyon is their favorite. And there are a lot of reasons for that. It's relatively mild whitewater, class 3 at best, but there's a fair number of rapids, but there's something about the vibe of Desolation Canyon. It's a peaceful place. It is one of the most remote places in the country in terms of just being, out and away from everything. And it's over a mile deep at its deepest point. Technically, from river to rim, at one point, it's deeper than the Grand Canyon. You don't get that same perspective that you do in Grand Canyon with the sheer cliffs, but it's just a stunningly beautiful place. Amazing outlaw history, old cowboy homesteader history, world-class archaeology with petroglyph panels from the Fremont Indian culture, and it has great camping beaches. It's free flowing.
Nice.
Yeah.
Cool. Okay. I just want to know too, like from your perspective, you are like one of the original America Outdoors people. Why is this so important to our organization? Why is this such a big deal for you to do for America Outdoors and for people to attend?
Well, I became a believer in American outdoors early on in my career when I moved into administration in a rafting company and started attending what we called Confluence back in the day, or the annual conference, and just for my business, the value that America Outdoors has brought to us has been, it's invaluable. I don't think I can put a price on it. Not only from government affairs work, because we're in the West, we operate on federal contracts and permits. America Outdoors has literally saved our business on more than one occasion. The government affairs work that gets done is critical. And so it'll be, over 30,000. It'll probably be somewhere between 30 and 35,000 probably dollars that's going to go to America Outdoors. And I know that Oars, who has been sponsoring a lot of these trips, has also been very generous to America Outdoors. And it makes a huge difference in us being able to retain the help that we need in Washington, D.C. for our government affairs work.
It's great. Thank you for seeing the value in all of that and supporting this. So the trip is we have, I think, 6 seats available left, if we're correct on that.
Yeah.
That will go. They're $1,700 a piece. That is less than you would pay going otherwise. It's all going to be people in our industry. It's a really good time to camp. Ruthie is nodding her head because she did this. She was on our trip last year. We did another trip last year, and it's just such a great experience to be together. So Brian, thank you for being so generous and so supportive of what we do. I appreciate it. Anything else, or we'll let you go and turn it over to Ruthie?
Yeah, if you're a musician, let me know. There'll be a guitar and mandolin, some percussion on the trip. So we got you taken care of. So.
Love it. Ruthie's got spoons too, so she's good with that. Brian, thank you so much. We hope to see you out
You're
there
welcome.
soon.
All right. Okay.
Um,
Take care.
all right, let's kick off this insurance talk. Ruthie, thank you for being here. I'm going to have you take over. We have insurance coverage for employee risk. Um, all yours.
All right, give me just 1 second to get the right screen sharing. All right. Karen, are you seeing it right now?
Got it. We're all good.
Awesome. Thank you. Yeah, thank you so much, AO, for putting this on and for having me, and enjoyed hearing so much about the Desolation trip. That trip was not the Desolation trip, but the AO West Coast trip last year was just absolutely incredible. So we are talking today about insurance coverages for employee risks. My name is Ruthie Rivers. I'm the Adventure and Entertainment Risk Consultant here at Granite Insurance. We have just a nationwide adventure and entertainment team that focuses in different types of adventure operations all across the US. So like aerial adventure operations, zip lines, climbing gyms, haunted attractions, all kinds of different stuff. We're also the designated insurance partner for groups such as Arrival or the Haunted Attraction Association and more. I personally lead our agency's River Outfitter division. I work with other adventure and entertainment operations as well and outfitters. And really, I actually was I was running an adventure operation prior to getting to the insurance side of things. I came from the aerial adventure operations specifically and was a client of the agencies and came over to serve the industry from the insurance perspective. So here's an overview of kind of what I'm wanting to talk through today, just the presentation structure. So on the right-hand side here, I've got the list of coverage types that I would like to go through. So all of these are employee-related categories. But I want to kind of categorize them into 3 primary categories. I'm a very visual person, and so this was kind of helping me get my mind right as I was planning for this presentation. I kind of see them falling in one of these 3 categories. So we've got protecting business assets, we've got protecting the employee, and then we have protecting the business from employee lawsuits. And I'm going to keep this visual very present through the conversation, just continuing to come back to it with each coverage type as we get to it, so you can see where it falls in this kind of category. So we'll start with workers' comp. Workers' comp is the first thing that you think about, right, when we're talking about employee coverages. But we actually have 2 different sections of your workers' comp policy. So I've broken it up into 2 here. We've got workers' comp primary section, and then you'll see we'll talk about next workers' comp employer's liability section. So workers' comp primary section, this is protecting both the employee and it is also protecting the business from employee lawsuits. So with the employer, it's protecting from employee lawsuits following an employee injury, and it's limiting what the employer can be sued for. And then the employee, it's really, workers' comp is kind of more like a benefit than, almost more of a benefit than an insurance solution. It's providing the injured employee with medical care following an injury and then compensation if they can't work while they are recovering as well. Typical limits, this can be really confusing for people just because of the two different parts of your workers' comp policy. Um, the primary section of your workers' comp is actually limitless. It doesn't have a set limit to it. If you have, let's say, for example, like a young guide who gets injured and requires lifelong care, that will be covered under workers' comp. It's not going to hit a limit and then stop paying out to that employee. Typical rating basis, and what I mean by rating basis is what is the insurance carrier primarily looking at when they are determining your premium? There are multiple factors that they're looking at, but it all starts with what is your annual payroll? How much is your annual payroll? So more annual payroll is going to result in higher premium, and then vice versa. If you have less payroll, then you are going to have less premium on your workers' comp policy. As far as requirements go, you are required by your state to have workers' comp in place for your employees. State laws are going to vary quite a bit across the US. So some states might say that for all private employers, regardless of how many employees you have, you must have workers' comp in place. Some states will start it at 3 or more employees. Some states will start it at 5 or more employees. It varies so much across the US. And something unique about workers' comp, just because it is a state mandated coverage for you to have in place. Let's say you're trying to get workers' comp in place and you are just going out to all of the insurance markets through your agent and nobody is interested in what you're doing. They're saying, hey, we're not interested in this activity. It feels too risky for us, and you're just not able to find that placement. There has to be a solution there, right? Because you have to have workers' comp coverage. So that's where the state fund or assigned risk program comes into play. It's saying if you cannot find coverage in the voluntary market, we have this other marketplace that we're putting together for you, that the state is putting together for you, where we can get you coverage. And assigned risk means that it kind of goes through multiple different carriers and it's assigned to them. So it might not be the type of business they typically work in. It might not be something they want to do, but they have to participate in this assigned risk program and get kind of randomly assigned operations in order to fulfill that requirement of having workers' comp. I'm going to go into employers' liability section of workers' comp next, but I know that these things, just webinars, presentations, can get so monotonous with one person talking the whole time. So as Karen instructed, she is asking for questions being put in the chat. And I know that there were some really fantastic questions provided before the start of this webinar, which I do plan to address later in the presentation. But as questions are coming up at the end of every section, I'd love to just check in with Karen and see if there are any questions regarding the workers' comp primary section.
Ruthie, I don't have anything yet, but if anybody's got anything, feel free. Oh, wait. Is the state fund required to provide coverage?
Yes, so different states are going to be a part of kind of different programs. Some states have their own unique program that they've put together. And then a lot of states are in this kind of one larger program that is managed by kind of like one kind of partnership. But if you cannot find coverage in the voluntary market, you should be able to find coverage in the state fund regardless of your operations.
Awesome. Hopefully that answers that, Sally. But if you have anything else, let us know. And that's it for now, Ruthie.
Okay. All right, we are going to move on to workers' comp employers' liability section. So this second section of your workers' comp policy is more focused on protecting the employer, protecting the business from an employee lawsuit. So this is more going to come into play when there is like gross negligence involved in an accident. So I've got a couple of examples here. So gross negligence or intentional harm, anything like that. Once an injury occurs, if an employee feels like there was gross negligence involved from the employer's standpoint, they can, in some scenarios, the laws vary by state on exactly how this is managed, but an employee can decline workers' comp coverage and instead seek out an attorney and come against you with an employer's liability suit. So a couple of examples, we'll go through these. Let's say that you are, for example, an aerial adventure operation. You've got PPE like a harness or lobster claws that you have for your employees. And you're going through your inspections on everything, and a staff member brings you a harness and they say, hey, this is failing inspection. It's looking like something that we should retire and not use anymore. And you, as the employer, say, "Oh, you know what? We have another round of equipment coming in a week or two. Let's just use it until then. It'll be fine until then." So you're knowingly, this should have failed inspection. You're instructing them to go back out and use it, and then an accident occurs. Or I've got one, a section of river is typically class 3 or 4, something that you run normally, but due to storms and raised water level, it now has class 5 or 6 rapids. It's not something that you should be running. But you don't want to cancel reservations. You want to keep that money. And so you tell the employees that they must take the trip out and then they get injured. So these are scenarios where the employee gets injured and decides to bring a lawsuit against you, but their family can also do that. So in those above examples, let's say that the above employees, they can't serve their family the same way they used to, and the family decides to sue you. Or the employee passes away in one of those above accidents and their family decides to sue you. These are all types of injuries and types of accidents where if a lawsuit was brought against you, the employer's liability section of your workers' comp is what would respond to that. Typical limits. Sometimes I see limits, more typical limits, just for the insurance industry as a whole of, like 500,000 on the employer's liability section. For adventure operations, I do not believe that that is sufficient. When we're looking at general liability policies, we're talking about coverage for third parties, for participants in our activities. We're looking at a base expectation of 1 million in liability. And I believe it should be the same with workers' comp employers liability as well. I think that we need to have at least 1 million on this. Most operations, I would say, have 1 million on their employers liability limits, but it's not infrequent that I see something more like 500,000. So this is something to pay attention to. You can also have, if you have an umbrella or an excess policy in place, you can have it just kind of sit over this limit and raise it, right? So we might have an umbrella or an excess policy raising our general liability limits. We might have it sitting over our auto to raise our auto limits. We can also have it sitting over our employer's liability section of workers' comp and raising those limits there as well. And rating basis, just like the rest of your workers' comp policy, is your annual payroll. And I will also say, if you have 500,000 limits on your employer's liability section, to raise it to 1 million, it is a fraction of the cost of your policy. It's not like doubling the price of your workers' comp policy or anything like that. It's a very minimal premium increase to increase your limits to 1 million. So it's definitely something I recommend looking into. Pause for just a second, and Karen, check in with you, see if
Yeah.
we have any questions on this section.
Yeah, Ruthie, I have a question from Tyler. Are premiums from assigned risk programs typically higher and coverage lower as opposed to signing up directly through a company?
Not necessarily. So all carriers are going to be limited on what they can charge. There are going to be kind of like bumpers up on what they can charge. Each state is going to have different rates assigned to different class codes of your employees. So, if you have an employee that's clerical, that's very low risk, versus adventure operations, that's a higher risky category of your employees. So that premium is going to be higher. That rate is going to be higher for that category of employee. But the carriers will have bumpers on there. The voluntary market might charge on the higher end of that category or of that kind of rating category, or they might charge on the lower end. It just depends. The state assigned or the involuntary market, that assigned risk market, it's going to do the same thing. You might see on the higher end, you might see on the lower end. It just depends on the carrier that you get to show interest in working with you.
Awesome. Tyler, hopefully that answers it too, but let us know if you need more. I also have a question from Alan. What is the typical rate for rafting guides? 10%? Question mark.
It totally changes depending on what state you're in. So, Alan, if you want to reach out to me after this presentation, we can talk more about your state, and I can kind of pull up a different kind of like rating map for different states for that class code. But it varies so much by state that that's not something I can answer on here.
Cool. That's all I've got for right now, so we can keep going.
Awesome. Thanks, Karen.
Thanks.
All right, so third, we've got employee benefits liability. This is going to protect the employer, and it's going to protect from employee lawsuits due to the mismanagement of employee benefits. And this one, I'm going to run through a little quicker than the other categories, just because it's not something that we see a lot of in seasonal business industry. There are occasions where this might be applicable to you guys, but for the most part, a lot of seasonal businesses are not offering employee benefits, so this doesn't wind up coming into play. So I've got an example here. This is the classic example for employee benefits liability. If you have an employee benefits program and on the enrollment date, you were supposed to enroll one of your new employees in your health insurance program, but you lose that file, you forget, something like that, and then they get injured outside of work, expecting to be able to come back and utilize their health insurance that they think they have in place. They learn that they don't actually have that health insurance and they don't have coverage for their injury. So they can then sue you for the mismanagement of their program. Typical limits we'll see on this is 1 million per occurrence, 2 million general aggregate. The way that the carrier is determining price for this coverage is your number of full-time and part-time employees. This coverage is often something that is on your general liability policy. Some carriers will even just include it as a part of their program. They might have like sub-limits, like lower limits, just as a free kind of throw in or something. But it's often built into your general liability policy. It often doesn't need to be like its own coverage carved out with a different carrier or anything. Like I said, this one's pretty short and sweet. Any questions on this one for me?
Ruthie, I don't have any questions at this point.
Okay, thanks. All right, this is a bigger one in my opinion, employment practices liability insurance. I think that this is fairly underutilized by the outfitter industry, and I think that it's something that most operations should have in place. It protects the employer, and it is going to protect from employee or even potential employee lawsuits. So things like wrongful termination, discrimination, sexual abuse and molestation between that employee and another employee, or between them and a manager, anything like that. So I've got a couple of examples here. We'll read through those as well. So I actually have one of my clients is going through this exact claim right now. So an employee gets injured on the job, and really they were underperforming. They weren't really a good employee anyways, and there was a plan to let them go. So they wound up being let go due to poor job performance. But the injured employee had that experience of being let go right after they got injured, and they said, "This is because I got injured. That's why I am being fired right now." So they went out and got an attorney and are bringing a lawsuit against the employer for wrongful termination. And this client thankfully has EPLI coverage in place, so they have coverage for this incident. Another example, you interview someone for a job and you don't wind up hiring them, but that person believes that they weren't hired due to discrimination. They bring a lawsuit against you. Or an employee is harassed or sexually abused by either another employee or a manager. They don't feel like you protected them adequately or dealt with that issue adequately, and so they bring a lawsuit against you. Um, this is going to be separate. I always like to provide this disclaimer because it can be confusing to people. Sexual abuse and molestation is something that you can have included on your general liability policy, but that is that is in relation to you and third parties, so like participants, visitors, guests. This one, employment practices liability, the sexual abuse and molestation aspect of this is with regards to your interactions with your employees, with your managers, with your team internally. So those are two different ways that you can be covered for sexual abuse and molestation. Typical limits we'll see ranging from 500,000 to 1 million. And the typical rating basis, the carriers are going to be looking at how many full-time and part-time employees you have. Really, this is a fairly affordable coverage, not for every single business, but average outfitter business, I'm going to say this typically winds up being 5,000 or less in annual premium. If you're an especially large outfitter, it's going to be more than that, but typically it's going to wind up being 5,000 or less. In order to provide this coverage, carriers are going to want to see that you have put thought into the way that you're interacting with employees, that you have clearly outlined your expectations of them and the way that you're engaging with them. They're going to want to see an employee handbook at minimum. Different carriers will have different requirements, but at minimum, I would expect to provide an employee handbook showing that you have outlined your expectations of each other. I also just pulled up one of our clients' employment practices liability policy, and I just wanted to provide just a screenshot of the policy's definition of what an employment practice act is. So I'll give you guys just a minute. I'm not going to read through each of these bullet points here, but I'll give you guys just a minute to peek through this. While I check in with Karen and see if there are any questions on EPLI.
Ruthie, there's no questions yet, but if anyone has them, feel free to enter them and we'll get there. But
awesome.
Good for now.
All right. This is an interesting one. We're going to spend a little bit more time on this one in particular. So protection and indemnity crew coverage. This is something that is going to protect both the employer and the employee in a similar way to workers' comp. It's going to protect the employer from employee lawsuits following an injury. It's going to limit what the employer can be sued for. It's sort of like the maritime version of workers' comp. This is something that's going to be applicable to, potentially applicable to river operators or people operating adventures on the water specifically. So it's the maritime version of workers' comp, and it allows for fault-based claims. And because of that aspect, it often leads to higher compensation for an injured employee. This has come on my radar actually fairly recently, and I've checked in with other people in the industry, with attorneys in the industry, and this is a fairly new kind of coverage concept, or at least it's been around for a while, but its potential applicability to the river operator industry is a fairly new thing that everyone is kind of figuring out right now. So to define it, this is brought about by the Jones Act, which is also known as the Merchant Marine Act of 1920. It's It's a federal law. It's intended to regulate maritime commerce, covering injured employees for their injury or illness while in service of the ship in or near water. Um, this was more meant for like bigger boat operators on navigable waters, like commercial ocean vessels, but it winds up being an argument which can potentially have this apply to rafting operations and other water-based adventure operations too. Its definition, as revised in 2005, can actually include things like surfboards, kayaks, etc. too. Um, and I have seen some examples online. I took the screenshot from an attorney website out west, where there are attorneys actually soliciting injured raft guides to try and bring a lawsuit um, in coordination with the Jones Act. So this is something to be aware of. I do want to say that I'm currently unaware as of yet of a case that has gone through successfully for the rafting industry. But I do think that this is something to pay attention to, keep our eyes open for, and see if we see lawsuits start to come through for the river operator industry. Again, this is fairly new to everybody that I've talked to in the industry so far. One other point to make on this before I go to the next slide, we're continuing to talk about protection and indemnity on the next slide, but if an injured employee makes a case, even if they are unlikely to win that case, these court cases tend to be really pricey because the only place to hear them is in federal court, and that's going to be really expensive. So Jones Act coverage, protection and indemnity crew coverage also includes defense. So again, even if you have an injured employee, even if they're unlikely to win that case, it does have to be heard in federal court. It gets really expensive. This coverage would provide coverage for that defense in court.
Hey, Ruthie, can I interrupt really quick?
Yeah, absolutely.
Does premium increase with overnight activities?
For what coverage? For workers' comp? Do we know what coverage that
I
question
guess
is
I
with?
don't know. Jeff, are you talking about workman's comp there? Oh, hang on, I got a hand up, so maybe we can just.
Okay.
Oh, that's Jason.
Do you want to give it a minute and come back to that?
It looks like
Yeah,
Jeff said employee to employee.
employee to
Okay.
employee. Okay,
When
thank you.
you
So we're
ask,
talking about like EPLI coverage?
Yeah, that's when it was asked.
Okay. No, it's not going to increase when you have overnight risks, but I do think that when you have overnight adventures like that, I think that that makes the importance of EPLI coverage even more present.
Okay.
on the overnight also, you're talking about your just sorry if this is wrong, but also on overnight it depends on the type of activity. So are you talking about a river trip overnight type stay, or like a guide who's doing river trips, or a guide who's doing like just a driving or a backpacking, whatever? Each activity has a certain thing, regardless of, or a certain class code that they fit under, regardless of whether they're a overnight guide, a day trip guide, right, Ruth?
Well, so that's a great question. So there is more of a kind of general like catch-all for adventure operations. And different states will have different class codes. So you might see some differences in this across the country, but in general, there's a class code 9180 that's going to be applicable to the majority of adventure operations. So you wouldn't
And
classify them differently for being a river operation versus leading a guided hike or anything like that. Again, with the knowledge that there are some variations across the US, but speaking in general, they'll probably all be in one class code.
Yeah, that's all of mine because I have some that just do day trips and some that do overnights, and they
Okay.
are all classed under the same class code. So that's why I
That
asked
makes
for
sense.
clarification. So
Yeah, and there is so there are scenarios where like let's say you have an employee or two that are fully clerical. They don't do any guided trips. They are managing payroll or in kind of like a back office scenario. You can break those out into a clerical class code and that will be much lower rated. But if that person does any bit of guiding, then all of their payroll has to go in guiding. So that line has to be drawn really, really clearly. They're either clerical or guiding. And there are other scenarios where you will see different class codes pop up, again, varying depending on what state you're in or what your operations are. But generally, there might be a little bit of clerical, and most everybody in adventure operations is going to be in that one category. Okay. Protection and indemnity, we're going to continue on this a little bit. So the Supreme Court made changes to the Jones Act in 2005. And you might be thinking to yourself, like, that was a while ago, right? That's almost 20 years ago. Why am I just hearing about this now? And I'm not really sure why we're just starting to see things pop up in the rafting industry with this. But they're changes that they made. Some of the definitions on the Jones Act say that it has to be on a vessel that is operated in navigable waters, which I have defined somewhat below. Must be used to transport goods or passengers, and it must be capable of movement. They actually they removed a requirement. It used to say that the vessel must be self-propelled. That has been removed, and now it just says capable of movement, which brings the potential for rafts and kayaks and surfboards and whatever else, floating boats, to be brought into this definition. I think that our biggest potential argument against the applicability of the Jones Act is there's like a 30% rule, and it's not going to be applicable for every operation, but it basically says, it's asking if employees are spending 30% or more of their time in service of the vessel. So I think that, if we were to see a lawsuit come up against the rafting industry for the Jones Act coverage, I think that might be kind of the place that we go to an argument against it. Navigable waters, this just cracked me up when I got this email in from someone in the industry that I was getting to advise me on this kind of coverage as I was starting to learn about it. If you can float a canoe filled with beaver pelts on the river and eventually, without having to remove the canoe from water, reach another state, country, or ocean, then it is navigable. That is a very outdated rule, I think, but it certainly paints the picture of kind of what they're looking for here. Protection and indemnity crew coverage with workers' comp. It's not a one or the other type of situation. This is something where you would be expected to have both of them in place at the same time. So some workers' comp carriers, and this is actually where I first started to hear about this coverage's potential applicability. I was sending some of my rafting operations over to workers' comp carriers and seeing if they would be interested in working on that workers' comp program. And they said that they would not offer workers' comp coverage on a rafting account unless there was also the protection and indemnity coverage in place. So they're saying we won't offer workers' comp unless you also show us proof of this other coverage. They want to, you can apparently track payroll separately. So, if you have a tracking system in place where you can say, this employee is spending, this much of their payroll is them actually on or near the water versus off water time. So you can report the off-water time to workers' comp and then the on-water time to protection and indemnity and have them covered separately there. But you would need to have both of them in place in order to cover all of your employees and to cover guides for their on-water time and their off-water time as well. Typical limits that I'm starting to see on these are 500,000 to 1 million, and it's going to depend on the number of employees or your annual payroll while the employees are actually on the water. This is just something I saw online, so I wouldn't put too much credence in it, but just as an example, I saw an estimate where I was seeing like 300 per employee per year. But again, this is something that I'm still working on, kind of getting my bearings on. I think the industry as a whole is still figuring this one out. Karen, I'm happy to take any questions on this one if anything has come up. Have you seen anything come in on this one?
Nope, I think you're good to move on. Unless anyone's got anything, feel free to raise your hand or type it in the question box.
Okay. Crime coverage and embezzlement. This one is focused on protecting your business assets, right? So employees stealing from the business. It's going to cover things like dishonest acts, stealing money, securities, or other property. I think that the best example of this one is thinking about if you have like a CFO starting to write recurring checks to themselves, but they make it appear as if it's being paid to a vendor or a general manager or whoever is doing this, right? It's not something that's often caught immediately. It's something that takes a couple of years to come to people's attention and to start finding these kinds of things. But at that point, it's accrued quite a bit. It's a lot of small transactions over a period of time. So typical limits that I see for this, 250,000 to 500,000, and it's going to specifically for the employee aspect of this coverage, it's going to be rated based off of your number of employees. In order to include this coverage, carriers are looking for things like background checks. They want to make sure that you're hiring trustworthy employees. And also something that they'll want to see ideally is the separation of duties. So, one team member actually doing the deposits versus another is writing checks, and you've got like a checks and balance sort of situation there where people keep an eye, you've got multiple eyes on your financial processes. You can have this built in to your property policy. A lot of times on your property policy, there might be just a little bit of coverage for this sort of thing, but it's going to be pretty minimal. And so if you do want larger coverage limits, if you have employees managing a lot of finances, or you want to have a commercial crime insurance policy put in place separate from just those small included coverages on your property policy. So this employee crime coverage, it's going to be a part of your larger commercial crime policy. You're not just adding an employee coverage for this. It's part of a larger commercial crime policy, and the employee aspect of that is just a small part of that policy. One thing to note on this one, if you are aware of criminal offenses from one of your current employees, they will be excluded from coverage. So let's say you hire someone who has a history of embezzlement. They embezzled, or they had a criminal offense at a previous job, and you know that, and then you put them in a role where they are managing your finances and something winds up happening, that will not be covered. So those background checks are crucial to protect you as well, and not putting people with potentially untrustworthy history in positions where you are trusting them with a lot of your finances. Karen, questions on that one?
I think we're good now.
Awesome.
Thanks.
All right, we've got like 10 minutes left, so I'm going to try and run through and address the pre-submitted questions here at the end too. Key person life insurance is this next one. With this one, we are protecting business assets specifically. So we're protecting from the loss of a key team member. That key team member's death might have a large financial impact on the profit of the business. So an example here, say summer is your busy season and your general manager has a terrible accident right before Memorial Day. In that kind of scenario, it's someone that you trust with your operations that runs everything, and it's going to be a struggle to figure out how to operate, right? So operations might have to stop altogether or slow down very significantly while you figure out a plan to replace them. Typical limits, it's going to vary so much, a case-by-case basis. But it winds up, price-wise, this winds up only costing something like $500 to $1,000 a year for $1 million of coverage. It's going to depend on the individual's age and health and how much coverage you're looking for, but that's quite often what we see. And I listed some of the questions that you would be talking through if you're considering this coverage. So, how much would it take to replace the individual to hire someone new? How long would it take you to replace them? What is their contribution looking like to your business's bottom line? And I will say this is a life insurance product. It's a little bit of a different animal from the rest of the commercial insurance world. So we, as an agency, offer solutions for all kinds of insurance, but this getting into life insurance is outside of my realm of expertise. I bring in a team member that has expertise in life insurance to guide these conversations and to talk through, where it might make sense on your team to have key person coverage, and what those potential limits might look like. A lot of times this coverage is for the business owner, but it could totally be someone that's in a very specialized role or someone that is bringing in a large portion of your sales. And this is, it's insurance on that key person, but the business owns the policy, it pays the premium, and it's also the beneficiary if that person dies. And it's used to replace their lost revenue as you're looking for a replacement for that role. This next slide, I just wanted to just kind of summarize everything up. Again, I'm a very visual person, and so it's helpful just to kind of have all of the coverage types with their highlighted color here for you guys to take a look at before we go into the pre-submitted questions. All right, here are the pre-submitted questions. We've got questions on workers' comp rates, workers' comp options in Montana, if there are any concerns or issues for nonprofit outfitters, and then how to work with employees who have pre-existing injuries that might be prone to re-injury. So thank you guys so much for submitting these ahead of time too. This was fantastic. We might have already addressed this person's questions earlier in the session, but Karen, if you see any other questions coming in, feel free to jump in. I wanted to just go ahead and summarize what workers' comp rates typically look like. So you take the class code rate, so whatever rate your state and that carrier is charging for the class code that your payroll is in. Again, higher inherently risky roles are going to have a higher class code rate versus lower risky roles like clerical are going to have a very low rate. You're going to charge, multiply that by your annual payroll, and then you're going to take that number and multiply it by your experience mod if you have one, and that results in your final premium. That's a very simplified kind of equation for what your workers' comp premium looks like, and there are other factors that come into play as well, but big picture, that's what that calculation is. And if you're curious about what the experience mod is or how that works, I have done a presentation on that in the past and dug real deep into that, and I wrote an article for America Outdoors as well. So if you want a link to that article or have questions on that, feel free to reach out. What other questions do we have on this topic, Karen? Anything else coming in for this?
I don't have any other questions. Jason did say this has been very informative and well done. He's going to do an audit of his insurance for WC to make sure he has things set up right. And he learned a few things here. So thank you. Thanks for that comment, Jason.
Thank you very much. Montana. Montana is really fun with workers' comp, and I hear from quite a few people in Montana that they do not enjoy working with the state fund. Um, Unfortunately, there are not a ton of voluntary options out there. I listed some of them here, but a lot of times we're going to see things like a $10,000 minimum premium or a $25,000 minimum premium, or they don't like equine, or they don't like whitewater, or Montana isn't a core state, which means, if let's say your operations are based in Idaho, and then Montana, you do a little bit of work in Montana. They might be okay with that, but if you are only in Montana, they're not going to entertain that. Or they want to see a specific number for your experience mod. There's so many different things that we see coming in from different carriers, and it's really a case by case basis, depending on where your operations are, what kind of operations you have, what your payroll is looking like, and if you'll meet a carrier's minimum premium, and just so many other things. And sometimes what carriers tell us one day, we just will send them another submission for another operator, and all of a sudden they'll be fine with it. So it's not really an exact science, and unfortunately, as much as I would love it to be. There's a lot of conversation and providing SOPs to convince carriers that you're a responsible operator. It's a total conversation on every single workers' comp submission to try and find a voluntary market. That's true with every state, but Montana in particular is that way, especially. I loved this question. Thank you to whoever sent in the nonprofit question. So there are two things that I would specifically pay attention to when you are discussing nonprofit concerns. One, you may be more prone to using volunteers. If you're using volunteers, I would think about the waiver that they're signing. Hopefully, you're having them sign some sort of waiver, even if it is just your general kind of participant waiver that you have. But with being in a volunteer position at an adventure operation, you might be exposed to other types of risks that you're not exposed to being just a participant. So this is something to think about. In your waiver, you have the acknowledgement of risks, right? Where you're going through and you're outlining the types of risks that people might encounter when they're engaging with your operations. If it's not outlining volunteer risks as well, then it's less likely to hold up in court if a volunteer decides to sue you. So having a waiver that is specifically geared to them is something worth considering. Also having a signed agreement where you're outlining what is or isn't acceptable for them within kind of their duties, what's expected of them. And volunteers are actually going to, most of the time, coverage is going to be excluded from your general liability policy, and it's also excluded from your workers' comp policy. So if a volunteer gets injured and tries to bring a lawsuit against you or something, you might not have coverage at all for that. So having that waiver that can actually uphold in court is the first line of defense there. But I would recommend considering a participant accident program in place to cover injuries. This is often used for participants. You can use it to cover their medical bills and keep it from turning into a lawsuit, but it can also be utilized to cover volunteer injury. So that's something to consider. And then directors and officers coverage. So if you are a nonprofit, if you have directors and officers managing your operation, this is definitely something that you should have in place. It's going to protect those directors and officers' personal assets from claims that might come up just as a part of them performing their duties as a director or officer. So they're covered for BIPD, means bodily injury, property damage. Those are the things that your general liability policy is structured to cover: bodily injury and property damage. But if there's a scenario where through their actions as a director or officer of your nonprofit, if they cause financial damage to another entity, a vendor, a partner, an employee, whatever, that's not something that will be covered by your general liability policy. So a lawsuit could be brought against that director or officer directly for that financial damage, and they wouldn't have coverage for that. So by you as a nonprofit having directors and officers coverage in place, you can have them covered from personal lawsuits brought against them.
Awesome. Can I
And
ask a
then,
question real quick?
yes, yeah, absolutely.
Okay, so if you are based in Nevada and Utah and you operate in multiple states like California, Arizona, Nevada, Colorado, etc., will the state fund cover work in all these other states?
No, so some states have reciprocity set up where the state fund might accept coverage for like one neighboring state or something, but for the most part, no, that's not going to be true. You would have to have, if you are doing the state fund in every state, you might go through the state fund for each of those individual states. Hopefully, with that, you can find a voluntary carrier to cover all of your operations in all states. But no, most state funds will just be for the state that they're in.
Okay, thank you.
My last, and Karen, am I okay to cover this? I know we're 1 minute over right now.
Yeah, I think we're 1 minute over, but this question has been asking, I would say we are at 2:00. If anyone needs to leave, I thank you for joining. Ruthie's done a ton of work setting this up. And so Ruthie, if you want to answer this last question, we'll wrap up here in just a couple minutes.
Awesome. Thank you so much. So hiring with pre-existing injuries, this was a fantastic question as well. So you cannot, before you provide a job offer to somebody, you cannot ask them for information on their kind of health. But if you provide a job offer, you can have them complete and sign a post-offer medical questionnaire, which I've got a document that I can send you if you have, if you want to reach out to me via email after this presentation, I can send it to you. But it's basically asking this individual to outline previous injuries, medications that might impair them during their work, and then also, what kind of physical limitations that employee might have if they do have previous injuries. Their doctor has said that they shouldn't lift anything that weighs over 50 pounds or whatever that might be, right? So it's just informing you as the employer and making sure that that they are going to be able to perform the job functions that you're expecting of them. One thing that's going to come up with this, if you do have a workers' comp claim where you believe it was a pre-existing injury, the adjuster is going to be asking if the work accident worsened the pre-existing injury. Or if it is just, you had an injury before and it's just kind of the same thing coming back up and recurring, but it's not actually worsening it. That's going to be a major factor in that kind of determination of whether it should hit workers' comp or whether it's excluded from workers' comp and the employee needs to pay out of pocket. Any questions on that? Awesome. Sorry to be running over you guys. Thank you so much for your patience and fantastic questions and for helping choose the topic for today. I'm so excited about the just engagement from you guys on informing me, with what will be most helpful to you. So please keep those recommendations coming. Let me know what presentations are most helpful for you guys as outfitters. And I hope you have a fantastic 2024 season.
Yeah, Ruthie, thank you so much. Ruthie did a ton of work, put a lot into this, from designing it to producing it to showing up. So thank you, Ruthie. Everyone for being here. Thank you so much for your attentiveness, for your questions. Thank you for being America Outdoors members. Your membership supports the work we do and the events we host. So huge appreciation for that too. We're going to cut it off. I hope you all have a wonderful afternoon. Thanks again.
Thanks so much, Karen.